Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. So we're going to be talking about how often you should apply for a credit card and most importantly, how to avoid getting a denial. Now, I've applied for over 50 plus credit cards and I've successfully been approved for more than 30 of them. So I want to share exactly what my experience is and all of the patterns that I've noticed, develop a strategic outline that I believe anyone can use to get approved for credit cards, or at least greatly improve the odds of approval while minimizing your chances of being denied. So without further ado, let's get right into it. Let's start by discussing the 5 factors that make up your credit score and how you can get most of the value out of these factors, which of course will directly impact your credit card approvals. Now, for the purpose of this video, I am under the assumption that we're looking at someone that has a fairly good credit score, and we're not trying to get rid of any derogatory marks because that will definitely impact your chances of approval. But I do want you to understand how your credit score is broken down and what's most important for credit card approvals in the first place. So your payment history is 35% of your credit score. This is the most significant factor reflecting your history of making on-time payments on all your credit card accounts, as well as any credit account that you have. Now, late payments, even by a few days, can negatively impact your score. And this factor is, again, a zero-sum game. You need to have no late payments, not even one, in order for you to maximize this 35%. To avoid this and ever becoming late or this being a problem, I recommend that you just set up auto pay for all of your credit cards. And I would do that before the due date. Myself, I also set up in my iCalendar an alert for every single one of my credit cards. So anytime I have a new credit card that I've just been approved for, once I do know what that due date is, I will put it into my calendar. I set that to reoccur every single month, and it will update me the day before and the day of. That way, just in case for some reason I overlooked it or I was very busy, I have multiple alerts as well as auto pay set up to ensure that I don't ruin my credit score. The second most important factor of your credit score is amounts owed or utilization. It is 30%. Now, this factor sometimes can be very confusing for a lot of people, so I will try to explain this as simply as possible. Now, this factor considers the total amount of debt that you have on a credit card as well as what you have available on a credit card. So if you're using a very small portion of your credit card limit, then this is going to look very good for your credit score. If you're using a large portion of your available credit, then that can signal to lenders that you're overextended. I recommend to everyone that they have a 10% utilization at least. This is ideal for having a very high credit score. Now, to calculate this percentage, you would take your total credit limit and multiply that by 0.10. So for example, if you have a $10,000 credit limit and you multiply 10,000 times 0.10, that's going to equal 1,000. So you need to have a balance of $1,000 every time your statement cycle date closes to ensure that you're meeting this 10% utilization, and that's in this example. Now, the other thing that I want to make note of is your payment due date is the day that you should pay your balance in full. You're going to always see this on your statement. The next thing that you're going to see is your statement cycle close date. Now, some of you might be wondering, how can I have a $10,000 credit card and just ensure that I'm always using less than $1,000? Well, I'll give you a different example. You can actually spend $9,000 on a $10,000 credit card. What you want to make sure is, first, you have auto pay set up to pay your previous statement balance. And then if you use, like, let's say $9,000 of your credit, even before your statement cycle date closed, all you want to do is make sure that you pay $8,000 of that $9,000 before your statement cycle date closes. The reason being, once your statement cycle date closes, that takes a snapshot of the last balance you had on your credit card, and that's what gets reported to the credit bureaus. So they are going to see you had $1,000 used out of $10,000. That would give you 10% utilization. Now, if you want to maximize your score, I recommend that you have between 1% to 2% utilization. Now, I know for some people that might be, very difficult. For a $10,000 credit card, 1% would be $100. Usually, I do this when I know that I want to apply for something and I just want to put myself in the best situation to get approved. So I'm not saying by any means you need to do this every single time. I'm just saying if you know something is coming up and you want to put yourself in the best position to maximize your credit score, then you can do this. It doesn't have to be all the time, but in our example, if I have a $10,000 credit card, I will never have more than 10% reporting, just to always keep my credit score high, because you never know. I may want to apply for something and something may come up and I don't want to wait 30 days for that to update. So instead, I never do any more than 10%. And when I plan for something, I make sure that it's around 1 to 2%. I have an entire video that talks about statement cycles, and it also talks about paying on your due date to maximize your credit score. If you have not seen that video yet, then I recommend that you watch that if this explanation was not clear enough for you. I think I do a really good job in explaining in that video. The last 3 factors are going to be pretty easy to explain. The next one is length of credit history. This is 15%. Now, this factor looks at how long you've had your credit accounts and how long they have been open, indicating your experience with credit and responsible credit usage. Now, to maximize this, all you need to do is simply keep your account open. That's pretty much it. The longer you age your account, the better this score factor will be. Now, keep in mind, your oldest credit card account is always your most important because it is literally the cornerstone of this particular factor. That's the reason why for your first credit card, I would get something with no annual fee, something that you don't mind keeping open for the long term because it will be the backbone of your credit history. So keep that oldest account open at all times. And don't go for the most premium card for your first card because, if there isn't something to downgrade to later on, maybe you don't want to pay that annual fee on that particular card. It's going to be very hard to do so if it's your oldest account. New credit is the next factor. It's 10%. This factor considers how many new credit cards you've opened recently and how many inquiries have been made on your credit report. Now, opening several new accounts in a short period of time can signal to lenders that you are higher risk. Now, even though this factor is only 10% of your score, it can be very impactful when you're trying to apply for brand new credit cards. The last factor is credit mix, which is 10% of your credit score as well. This factor considers the type of credit that you have, such as credit cards, installment loans, mortgages. A better diverse credit mix can indicate to financial institutions that you're responsible with different types of credit, smaller amounts, larger amounts, ones that are backed by collateral like auto loans or like mortgages or things like a personal loan. They want to see that you can handle multiple types of products. And this is the last factor in your credit score. And this is the complete breakdown of how you can actually maximize each of your credit score factors. Next, we're going to discuss lender rules. Now, there are so many different lenders that I could talk about, and because there are so many rules, I just want to stick to 4 banks for today. That's going to be American Express, that's going to be Chase, CapitalOne, as well as Citi Bank. Now, let's start with American Express. American Express has a limit of 4 to 6 credit cards per individual. They used to have a 4-card limit, but have since increased this. This limitation is placed on revolving cards, and it appears that you can actually have 10 charge cards, but that is a lot harder to hit. Amex also has a once-in-a-lifetime welcome offer rule. So American Express's per life rule basically means you can only earn a welcome bonus offer on a specific card once, regardless of how long ago you previously held that card or you earn that bonus. Now, this applies to each card individually, not as a whole. So you can have 2 American Express Golds, you'll get 1 welcome offer. And then if you apply for, let's say, the Delta Reserve, you'll also be able to get that offer once, and that is it. You'll never be able to get that offer again. American Express also has a 1 in 5 rule, meaning that you can only apply for 1 Amex card every 5 days to avoid a denial. The 1 in 5 rule does not apply to charge cards. You want to keep that in mind. So you can apply for a charge card and a revolving card within 5 days of each other. There's also the Amex 2 in 90 rule. It means that you can only be approved for a maximum of 2 American Express credit cards within a 90-day period. So I believe that's a majority of the rules with American Express. I may have missed some, but if I have, then just let me know in the comments so that everyone else can know any other rules. Now let's move on to Chase. The Chase 524 rule means you'll likely be denied for most Chase credit cards if you've been approved for 5 or more personal credit cards from any issuer within the past 24 months. That is a pretty hard rule. The only way that I could think that you can possibly circumvent that is if, let's say, you're an authorized user on a credit card. You can call the Chase Recon line. You might be able to plead your case, but that's just, one instance where I could think where that might work. One advantage you also have is that business credit cards that don't appear on your personal credit report do not count towards the 524 rule. So pretty much all business credit cards except for CapitalOne would apply to this. Chase also has a 24 and 48 month welcome offer rule. So the 24 and 48 month rule refers to the Chase policy regarding welcome bonus offers on Sapphire cards when you're ineligible for a bonus if you've received one on the same card or any Sapphire card within the last 48 months. Chase also has a 2 in 30 rule, which says that you can only have 2 applications every 30 days or else you'll automatically be rejected. There's also a 1 Sapphire card rule. You can only hold 1 Sapphire card at a time. However, Chase does not limit you on the number of credit cards that you can actually have with them, but there is a cap on the total limit of credit that they are willing to give you. CapitalOne has a few rules, but they all seem to be a soft rule, meaning they apply sometimes, but not always. So take this one with a grain of salt. Now, CapitalOne can restrict you to 1 personal card and 1 business card approval every 6 months. Once again, this is a soft rule. I've seen it broken a lot, but I did want to make sure that I mentioned it for accuracy. Now, we've also seen where they limit you to have only 2 personal cards at a time, but it seems to only impact more premier cards like the Venture or the Venture X, for example. However, in the past, this has been proven false, but once again, just want to make sure for completeness and accuracy that I do mention it. CapitalOne also has a 48-month rule, and CapitalOne's 48-month rule means that you're generally ineligible for a welcome bonus on a personal card if you've received one for the same product within the past 48 months. And that's pretty much all the rules that I'm aware of for CapitalOne. Once again, if you know any more rules, then let us know in the comments below. The last lender will be Citi Bank. Now, Citi Bank will restrict you to 1 welcome offer on each of their cards every 24 months, except the Citi A Advantage card, the American Airlines card. Those seem to be once every 48 months. And then a lot of you may be familiar with the Citi 865 rule. Applicants are ineligible to apply for more than 1 Citi credit card in 8 days and no more than 2 credit cards in 65 days. And finally, the Citi business cards have an additional limitation that I had to learn the hard way, and it's 1 application every 90 days. So you just want to keep that in mind. If you are applying for those Citi business cards, you get 1 application every 90 days. All right, so what you've been waiting for, let's discuss how long that you should wait to apply based off of all of these rules. And I just made sure that all of these will be in the same parameters for what we just discussed. So if you are new to credit, you should get 1 to 2 credit cards in your first year. And this is exactly what I did. You want to hold the first card for at least 6 months before applying for the second one. Now, the reason why I say this, if you are new to credit or you're in the process of rebuilding where you have a very short credit history, you need to get some skin in the game first. You want to get a credit card and you want to hold it for at least 6 months before applying for a second one. Remember, every time you open up a credit card, it shortens your credit history. It gets cut. So in the beginning, you really want to just establish a foundation for your credit history by not applying for too many cards in the beginning. There are also some cards that will deny you for a limited credit history. So it does limit the amount of options that you have. So just as a rule of thumb, year 1, get 1 card. and then maybe in 6 months, get the second one. Once you get past your first year of credit history, you can apply for one new card every 3 months. Once again, this is the same route that I took. The longer you wait, the better your odds are for approval. I remember I applied for a card with Wells Fargo, and this same rule will apply. But I applied for one personal card, and then I applied for one of their cards, I would say like 2 months later. They let me know I had too many recent accounts opened. This also applies for a few other products, like even loans. It seems like if I apply for something new, I can only get approved if I wait 90 days from my last approval. That's even with having credit that's older than 1 year. So that's my recommendation. If you're older than 1 year for your credit history, apply for one card every 3 months. Not to mention, if you get a new card, it gives you about 90 days to hit that spin bonus. A lot of the, medium cards, a lot of the intermediate ones, they allow you to have a pretty good welcome bonus, and you're going to need some time to kind of spend that money, right? So take advantage of that first and then move on to the next one. Now, if you have long, extensive credit history and you have, let's say, high credit cards with big loan histories like a mortgage or having an auto loan or having a personal loan that's maybe, $30,000, $40,000 to $50,000, you can apply for a new credit card every 1 to 2 months. There are a lot of limitations on credit cards in the beginning simply because they want to see extensive credit history. They want to see that you handle high balances. And on top of that, they want those high balances to be paid down. So if you have those three factors, pretty much with a very solid credit score, I would say 750 and above, you can pretty much apply for anything that are within those other rules that these lenders have. Those things pretty much get you open to any credit card that you would like to have. Now, for my secret strategy, because I'm sure a lot of you are thinking, well, if you were rebuilding your credit, how did you get so many credit cards? My secret strategy has always been business credit cards. Most of those do not show up on your personal credit report, meaning they're not limited to a lot of the rules that you have for personal credit cards. They don't impact your credit age. The utilization isn't impacted, and you can remove hard inquiries for business credit cards because they do not show up on your credit report. If you're interested in learning how to remove hard inquiries, I have a video that'll explain that, and you can watch that video. But there's a business credit card for almost every premium card that you would like to get, and you could get them without a lot, again, limitations. So my recommendation is in year one, get one personal credit card that can have a really high credit limit. In my case, that was Navy Federal. Like most of you know, that particular credit union can have limits up to $80,000 if you have the flagship card. So that's one way that I was able to just take one card and let my limit increase. Then I just let my credit age. I didn't apply for a second personal card until a year later. And then, so on and so forth is how I handle that situation. In between that time, I applied for multiple business credit cards because they didn't have this limitation with the exclusion of CapitalOne. The CapitalOne Spark card and a few of the other CapitalOne cards actually will report to your personal credit. Recently, I learned that the CapitalOne Venture X card and the CapitalOne Miles card, the business cards, I believe those don't report to your personal credit. From my understanding, now I haven't tried it yet, so again, take it with a grain of salt. But from my understanding, and if you can, do your own research, read this, I've read it plenty of times online. The charge cards that CapitalOne offers, the business ones, they don't report to your personal credit. And I'm willing to test out that theory once I am ready to apply for one of those cards. Now, I'm not looking to do that anytime soon, but I might look to do that in a few months. All right. Thank you guys so much for watching this video. If you have any questions or any other data points that you would like to add, please drop that in the comments below. Hopefully, this is some information that can help you when it comes to getting approved for credit cards and not getting denied. If you used any of this information in order to actually get approved, please drop that in the comments below. Once again, thank you so much for watching, and you have a wonderful day.